All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for today's session, Benny Allen, and I'm definitely happy and grateful for all of you being here with me this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and as always, let's make sure that we participate and engage. Everybody can hear me loud and clear, and you are all ready to go. Do me a huge favor, drop me a 1 in the chat. Let me know that we are all set. All right, so you guys are hearing me loud and clear. All right, I appreciate it. Those ones are important, as I have been having some computer issues as of late. I don't know if anybody uses like Windows 11, but I seem to be having an issue with Chrome. Like my Chrome keeps crashing on me. So my Google Chrome. So I uninstalled it, reinstalled it, all types of stuff. I don't know what's going on, but it is what it is. So let me do a couple things here. No, never updated Windows 11 cause problem. I know, right? So I actually got a new laptop a little while ago, and it came with it on it. So I was cool with Windows 10, but the new laptop came with 11. And I hear there's a lot of bugs. So yeah, every once in a while I'm getting jammed up. So, but knock on wood, hopefully we are all good this morning. I appreciate it. So, well, let's break into it, right? Let's take a look at trading economics to start out, right? So we see here in the morning, German investor morale at a 6-month high. That is good. So that's the zoo economics. So you know how we have like the, here in the United States, the University of Michigan Consumer Sentiment. They have the zoo indicator economic sentiment for Germany. So it surged to 10.3 points to negative 1.1 in October, the highest score since April, and beating forecasts of negative 9.3. The largest economy has likely, Europe's largest economy has likely overcome its recent downturn amid expectations of further reduction in inflation and stable short-term interest rates in the Eurozone. All right, so that's good news for the Eurozone. And here we have the U.S. Treasury yields continue to rise, right? So we know, right, those yields going up, usually the dollar strength can follow a lot sooner than later. We see here that UK wages rise less than expected. We know that that's been a sticky issue. Wages in the UK, just like here in the United States, so they rose less than expected. So maybe we're starting to see some of the effects of those past rate hikes. The Reserve Bank of Australia warns of low tolerance for sticky inflation in their minutes. All right, so I'll read into that more, get you guys an update in the Discord when I read more in detail in regards to what they are talking about. And then New Zealand inflation eases to 5.6 in Q3. Okay, so a little bit of everything going on everywhere regarding inflation. Seems to be tailing off in some areas, seems to be a little bit more stickier in some. So the narrative continues. On the Forex factory, we've got Tuesday here, GDP average earnings. We saw that come through, right? That's what we just read. 8.3 is the forecast, came in at 8.1. And then at 8:30, we've got CPI data coming through for Canada. All right, so that's going to be very, very important. Okay, we see this huge red folder, and then we've got retail sales for the United States. So a busy morning, right, as we head into that 8 o'clock hour. So we should see some volatility. And then today we have another FOMC member, Bowman, speaking during the Saturday ritual. Gave everybody a heads up that you're going to have a lot of Fed members speaking this week. We've got another one today. And then at 6:35 p.m., we've got Reserve Bank of Australia Bullock speaking. And, you know, we just read that headline in regards to the RBA warns of low tolerance for sticky inflation, right? So we'll see what that means. What else do we have? We got some retail sales data coming out of China at 10 p.m., industrial production coming out, GDP year over year. So a fairly busy day, and it's spread throughout the day today. So look forward to seeing some volatility, getting the markets move. Any questions on the fundamentals? All right, we are good. Okay. So Ryan, I know you're out there driving, sir. Drive safe. Just want to say good morning to you.
Appreciate it, bro. Good morning, everybody.
All right. Be safe. Be safe on the roads. Real quick, anything fundamentally you're keeping your eye on?
No, nothing outside of what you mentioned, bro.
All right. All right. Be good out there on that road, man.
Yes, sir.
All right. So let's get rocking and rolling on these charts. Head over to the DXY, right? We see it's bouncing around. We'll come in to the daily chart here. We see it's bouncing around. That daily stochastic is back in the buy zone, right? So you can see we kind of ranging a bit. We got that's a nice bullish candle, and we're retesting that level again, right? So we're right back above that level. We just saw the headline that the bond yields, right? U.S. Treasury yields rise, right? 4.75 on Tuesday, rebounding from a 15 basis point fall last week. So we'll continue to watch that dollar strength. Is back and forth right now. So that's it. I mean, it's pretty clear cut on the DXY right now. Any questions? Right. See what happens, right? We've got retail sales data coming for the United States. That is 8:30. Okay, same time as Canadian CPI. So we'll see. We'll see what happens. So let's hit the charts. Let's go into some of the pairs we were looking at during the Saturday ritual this week. We'll start out there. You see a trend line break bearish for the dollar on the one hand. We'll see that. I guess we're keeping a close eye on that, right? That's what you've got on the 1 hour, because we've got that retail sales data coming up. We'll see if it comes in at above or below forecast and see how it reacts. All right. So let's go back to that real quick on the DXY. And right. So right, still bouncing around, right? We did get a trend line break back to retest that level. Right? Pushing up right now. So we'll see what happens, right? It came right back down to that level. And it's holding too right now. At least that's a 1 hour chart, but stochastics in the sell zone, right? So we shall see. We'll see on that. All right. Let's go take a look at the Aussie CAD. It will blaze right through the ones that we were looking at on Saturday to start off this Tuesday. See what we're looking like. See if we've been able to catch any pips, right? So we take a look at this weekly chart on the Aussie CAD. You can see that we spotted that. Yes, we've been bearish, but we've come into a potential double bottom at this 85.96, and it seems to be holding right now, right? This is a weekly chart, and so we're getting some bullish momentum to start out the week. Okay, so if we come down, we'll come right to our setup, and you can see that we've got that 80-20 in play, right? It's looking pretty good, right? We had the drop off, and then we got the U-turn. Okay, tension, and now we're moving up. Now we're right here. We've been here before. Okay, look at this level. Okay. Okay, all types of action across this level here where we're at. This 4 hour 86.62 level, and you can see it's getting held up again. You see it's getting held up again. So we expect a 382 on that, but watch that closely, right? Manage your trade. Some of you might have moved your stops up in profit already. Okay, so just know we're at that level. If you decide to reduce the trade, cut your trade in half, move your stop, wouldn't blame you at that point. That's a key level of resistance. So however you manage it, but we've got the direction right. That's the key. Okay. Oftentimes, beside risk management, traders fail, right? Can't get consistent because they can't get the direction right. on a consistent basis, right? So far that trade is up. That trade is in the positive. Any questions on the Aussie CAD? We have anybody participating in that trade? Anybody able to take advantage of it? All right, some of you might just be staying short with the trend, playing that one, waiting on a high price. Beneath, yes, okay, awesome job. Awesome job. Nope, staying short, waiting for the high price. All right. Yeah, you're welcome, Beneath. Drop you some sevens, man. Took that short one. It's a good way to start. Good way to start the week. Come out the gate on Sunday. Enjoy you staying short. I feel you. If you're with the trend, you're just waiting on the high price, maybe to add to your position, right? Either way, it's multiple ways to skin a cat. Okay. So that's that on the Aussie CAD. Now keep in mind, right, fundamentally, we have what was that here at 6:30? We got Bullock speaking. We know we've got the headline that says RBA warns of low tolerance for sticky inflation. Okay, so this is probably just it's coming from their minutes that they decided to hold last meeting. They decided to hold and not raise rates, but they're sending a warning that they have a very low tolerance for sticky inflation. So meaning that there's a possibility in the future that they could raise those rates. It's not off the table. All right. So that's the Aussie CAD. Let's dive in, take a look at the Aussie yen. That was another one that we looked at on Saturday. And we see here that we, right, have gotten beyond TP1, right? So congrats if you took that. 89 pips or so, depending on where you got in, if you decided to trade this up. So that's pretty good. That's pretty good there, right? Just another day at the office for us here in the inner circle in the Forex trade room. So we'll see, right? That it pushed, you see here, we're pushed right below that 94.86. That's a 4-hour level, but it hasn't closed below it yet. Okay, stochastic is back in the sell zone. That got pretty close to TP2, so that's been quite a ride. So if you're out, I totally understand at this point. So hopefully some people are able to take advantage of that. Oh, Carolyn, that's cool. You got another challenge with the Blue Guardian. That's pretty cool. I see them on YouTube all the time. Hey, here's the thing, Carolyn. Hey, let's get you going. So maybe you could go. What is that? The Trading Nut. I always follow the Trading Nut on YouTube, and they've got traders on there that are struggling to get to that level. You say YouTube? It's quite entertaining. So over the last few weeks, they've had a couple traders just disappear off the map, right? So some of them failed the challenge, and that's just the way it goes. And then some of them just disappeared in the middle of the whole ordeal. So yeah, let me see. Reese, I passed one step with Blue Guardian challenge last week. It's funny. Wow. So man, you guys gotta get me into this. So like I haven't looked. I follow it, but I haven't looked at it too much, man. I might have to go pick up one of those too. You said you passed one step with Blue Challenge last week. So funny with them now too. That's what I'm talking about. Reese, drop Reese some sevens. Drop Ann some sevens. People out here shooting their shot. That's what's going on. That's what I'm on now. So they got a one step. I have to check that out. I love this group, guys. You guys are doing well. So here's the thing, Reese. You passed it, but man, those guys that they have doing their trading sessions that are helping people out learn the charts, like they're struggling with it a bit, including my man. I forget the head guy that runs that. But he runs he's working on like a bunch of different algorithms and stuff like that he uses to try to make them work. So I don't think he does too much manual trading, but it's all about the journey. Doing a rabbit. I was greedy the first one. Oh yeah, that's all right. Well, you learn, right? That's okay. It's okay. Because they don't have the 80-20. No, they don't. They don't have the 80-20. It really keeps things simple because some of them when I'm listening to them, I don't get it. I don't get what they're doing, but they do. So I guess that's all that matters. Yeah, it's all about a journey, man. You can't be afraid to get out there and fail, man. You just fail forward. That's all it is. Oh, that's good. That's good to know that you guys are doing your thing out there. Congrats, and taking it. And Reese, congratulations on passing it. You guys are awesome. So that makes us feel good.
Congratulations, everybody.
Yeah, for sure.
Do me a favor, anybody that's taking a challenge, if you guys can shoot us an email, let us know who you're taking that challenge with, and when you pass, let us know that too, so we can celebrate you, man. We want to know those things. We want to be able to support any way we can.
Absolutely. Thanks for putting it out there, Ryan. Yeah, that's good. So let's move on to the next. So that's the Aussie end, right? That one's in the bag. All right. Let's move on and take a look at the Aussie dollar, because that's another one that we were taking a look at over the weekend. Is definitely good when you get that volatility and stuff back in the market, because these setups move. Here was the Aussie dollar. So the week is a wrap already, everybody, right? for a lot of these. So here we are, back to TP1. We were saying, hey, we drew it up in the zone, potential double bottom at the 1.18 extension, and it held, right? Because we also know that was a daily level of support, right? We see that red line there, the daily level of support. So we've got TP1 on there, okay? So you're looking at 80 pips or so, depending on how you entry, right? So all we could do is draw the basic setup and structure. Where how many pips you catch just depends on you decide to enter the trade. How you decide to enter the trade. So that's a good one. That one's sitting at TP1. It'll be quite interesting today to see what the Reserve Bank of Australia president has to say when they speak later. So that's the Aussie dollar. Now this just might be your game you can eliminate all the guesswork, right? So once it gets to TP1, if that's your thing, hey, I only take it to TP1 and I'm out. That's fine. That's very simple trading, and it works, right? And it works. That's it could be that simple. You don't have to worry about TP2s or whatnot. You might be out, and I'm looking for the next 80-20. Right? Okay. So that's that there. Let's dive into because that's it on the Aussies right now. Let's dive into I posted this one yesterday because we talked about it on Saturday, and we were looking at the price level on this Euro NZD. Now, Reese, let me ask you this, Reese, for the sake of the group, right? Because we all trade different ways. I know you're on the 30-minute doing your thing, but when you're passing the challenge, are you using a wider stop loss, or are you keeping the stop loss tight above the high, prior to the move up or down? How are you playing it? Type it in the chat. We'll let it ride. So hopefully we get a response on that. But let's take a look at it. We were looking at this Euro NZD, and we were looking at that 178.25 level. And we got above it, right? So we posted that last night that we broken above that 178.25. So we've gotten above that high, and we are rocking and rolling now. Okay, so we know as of late that dollar has showed some weakness, and it's moving. I mean, the New Zealand dollar shows some weakness, and it is moving up right now. So we look to see if we can continue to catch higher highs and higher lows, right? So here, just a 1 hour, just another thing that we talk about and we cover, right? Inner to outer trend line breaks. Inner to outer trend line breaks. And we can see that it's moving. Look at that. Okay. is now moved from the inner to the outer trend line, right? And so we'll most likely hit that D extension, and we look to see if we can get continued gains, especially looking at that 4 hour, right? So if that 4 hour, if our 4 hour fib plays out, then this has quite a ways to go, right? Because we're coming out of that 61.8 zone. So we expect a 1.618 D extension. We're rumbling, we're moving higher today. Somebody tell me, why do you think that euro is moving higher today? Weak dollar? No, we just saw the dollar bouncing around. Right, that's right, JC, right? The news coming out of Germany, right? The largest player in the Eurozone. So that zoo report came out. So we always look for a catalyst, right? All right, good guesses, everybody. All right, so German investor morale at a 6-month high, right? So we got some positive data, right? So we think about like, what's the catalyst that's sending it, right? Because that's a big move. So we have to, continue to understand that when we get moves in the market, like impulsive moves, it takes a lot of weight to push that price, right? Like it's moving, takes a lot because we're right. When we think about pips, right, we're talking about 1/100th of a penny, right? So a fraction of a penny is what we're trading with leverage. So it takes a lot of capital to get that market moving. Okay, so we had the catalyst this morning that's pushing it in our direction that we thought it would technically. Okay, so that's the Euro NZD. So continue to see, right? Can we get pullbacks and continuations on that? Let me see, reach 0.5% per trade with the stop above or below the A. Then scale in. All righty. I like it. I like it. That's a nugget, everybody. Thanks for sharing, Reese. That's a nugget. Okay. Just think about it. Said, thanks, you would do the same. That's it. That's it. That's it. Awesome. It's a good morning. That is good. That is good news. That is really good news. So that's that on a Euro NZD. Let's take a look at our dollar, our Euro dollar. And last time I looked at this, it was still bouncing around. All right. So let's see. So you can see how we're, you're hanging in on this position because we're bouncing. See how we're holding at that level, that 104 level or whatnot from a weekly. It's kind of just stuck there. Okay, it hasn't pushed through the floor. So that gives us hope on our forever Euro USD trade. Right? Because, and you're right in that sense that dollar is bouncing around, right? It's weak, then it's strong, then it's strong, then it's weak. Right. So I get what you're saying when we were asking a question about the last setup, but you can see exactly what you're kind of playing out, what you're saying playing out here, that we have a dollar that's kind of bouncing around, but then we've got the positive data coming out of Germany today, and you see a little bit of an uptick. So that one still that's worked its way right back to break even right now. But you guys can see, like, if it hasn't hit that D extension and you're not over leveraged and things like that, just let it ride. Just move on, to these other setups that we're looking at until that one, starts to pay dividends if it's going to go in our direction. All right, it's either going to do that or it's going to hit the stop. So great work, everybody. That is the Euro USD. Let's move into these pound pairs that we were looking at over the weekend. Some of them, the pound CAD. We were looking for a move to be made on that. Let's go check it out. So we had this one on the 1. So we know we're looking at 4 hour, 1 hour. We know that we're already short, right? Off the trend line break. I don't know why my trend lines keep adjusting does that happen to anybody where your trend lines and everything move, like when you log out and stuff like that? But we already had the trend line break. Let me see. Yes. Okay. So it's just not me. I've been having all these computer issues lately. So I'm like, man, is it me or is this just something that happens? So we've already got a trend line break in the retest. We called out that double top at 167.61. and we're moving down. So what we had drew up on Saturday is a 1 hour chart, seeing if we can catch a pullback. But it missed my target. I wanted it to move, right? We almost got 50% and it's moving down, right? So if you're already short in that position off the 4 hour, then you're good to go. You might have taken, if you've been around your chart, you might have taken it short. If you caught it turning over, especially, look, we've got a strong bearish candlestick that's broken that 165.98 weekly level. Now it's moving sideways. So I've missed this opportunity, for an additional position. But if it just so happens that it wants to pull back and move a little higher, I'm game for that. But right now I'm gonna leave that one where it is. But we do have a break below. It makes it intriguing that we broke below that 165.98 level, right? So if I was looking to short this right now off that bearish close below that weekly level, I wouldn't put my stop above that A. I would put it above that high. And then if it pulled back and stopped me out, then I'll re-entertain it. But that's that. I think I'm gonna leave it be. So if you're able to catch that, congrats, because we're looking for that pound cat to continue to move down. Now this is the 1 hour setup down to that 164.67 level. But if you look at the bigger wave on the 4, that's got some room to run. Okay, so however you plan it, it's to the downside ultimately. Any questions on that pound cat? All right, let's look at our pound Swissy, right? So that's a C to D move, right? So let's look at the pound Swiss. So we know from the weekly, right? We got that break below. Right? And we know, like, it's just waves, right? Think of your head all the time, waves. The market moves in waves. So we get these breaks and these retests, right? You see here on the weekly. So what is that doing on the lower time frame? It's creating waves, right? Just always remind yourself of that, right? So if we look at it here on the 4, this is the overall move. Okay? So things are coming, right into play, right? It's kind of like in sports, right? It's just how I drew that play up, right? So A, B, C, D, wave, look at the break. And now we saw on the weekly, right, where we created that little indecision candle on the weekly after it retested. Look at it now, right? Okay. Look at that break in that retest. It's beautiful, right? It's like fine art. So here, so let's do this, right? So we come in and we do your candle overlay. And we see that. There's that candle. There's that weekly candle right there. Right? That's what creates that indecisive candle. Look at that push up, and then it's turning over. Okay. See that? So you're trading within a higher time frame candle. Okay. So the symmetry is amazing with this market. So here we are. This is another one that I didn't catch it. Right. This is a beautiful off the trend line break. Does me not being around the charts, right? But this becomes really, if you're around it and you pick up on it, right, which we should have noted, that there's your retest of that 109.99 level, and it's a monthly level, and it held. So these are those caveats that we talk about. Like, we have our sweet spots that we like to trade because it puts our risk to reward in line. But when you have, how we talk about it all the time, for those of you who've been with us in the group for a while, we talk about it all the time, like having those caveats, like where we might see a double bottom at a 236, or You know, we might have a major level, a daily, weekly, monthly level, you know, of structure at a 38.2, places where we typically won't take trades, but we put those in our trade plan, those type of scenarios. So we gain memory, right? And when we gain that memory, it's like, oh, I've been here before. I have to be on high alert for that. Like, this is one that I missed, right? So we got to pull back in the 50% zone at the edge of our sell zone, right here in the red. And it held and it turned over. See what I'm saying? So those are opportunities, right, that you could take advantage of. But it just comes with time. But this one I just missed it. Anybody short on that pound Swissy? Yeah, me too. I wasn't able to get it, but hey, we drew it up. The opportunity was there, and the direction is right now. So we'll see. We'll continue to see how that plays out. So with that Swiss franc, right? A lot going on where they started to let loose a lot of their foreign holdings in regard to foreign currency holdings. Okay. So what happens with that is when they do that, so think about it. If they sell off some of their foreign currency holdings, there's an exchange there, right? So you're exchanging that back into Swiss francs. So that pulls the Swiss francs out of circulation, right? Which can strengthen the Swiss currency. And they do that for several reasons, right? Export, import, export situations, things like that. And I'll post something in the Discord. I have to remind myself on that. But that's why we're seeing, and besides the fact that it's a safe haven, right? And what's going on with the war. So there's a couple of things that's been contributing to the strength of the Swiss franc. And I know we were talking about a little bit on Saturday, and I said I would put something out on that, and I need to just remind myself on that. So that's moving to the downside. Any questions? So far, so good on that. If you were able to grab it. So now it's like, hey, do we pull back, and does it give us another opportunity to get short? But stay disciplined, right? Don't catch FOMO, right? Where you feel like you have to jump a trade, because then that's exactly when it pulls all the way back on you, and you're in drawdown. Okay. So it's got a ways to go. If it's meant to happen, it'll give us another opportunity on the pull back down the road, but don't just jump and hit the sell button right here. All right. So that's that. Uh-oh, I got folks. I'm too busy charting up and talking. Good morning, everybody. I'm sorry. I got folks that didn't have control of their microphone. My apologies on that. All right. So that's the pound Swissy. Take a look at this pound yen. See what we've got going on here. And this one, right? So this was kind of a one is bouncing back and forth, but we said, hey, it's we may have some opportunity here. Let me clean this. Well, I won't clean it up. We can see it, but I got the smart analytics on here. But we know we haven't gotten a 382 or anything on that, and it's kind of just moving sideways. And we held at this 183.77. So as we work our way down through the charts, this is why we mark the top down, right? We can't say it enough, because now you start to get certain it creates confluences, right? So we've got this GJ on the 4-hour in the sell zone, right up around our 61.8. But look at that daily resistance level that's there, right? And you can see how we pushed down and broke trend line. So Saturday, we were looking for opportunities. Can we pull back and get a continuation down? That's never a guarantee, right? But we just had to trade what we see. So if you look at it here from this perspective, how we had this, it messes up everything. It's shrinking my markups, right? So we had, it's supposed to be like, anyway, I have to fix that later. But it was like 68 and 203. And that's a wicked move that moved down there, right? Look at that. So we'll see if it wants to revisit that low now. Okay, that was it's 80 pip move, that wick. Okay. So you can see how we pulled all the way back, right? As long as it doesn't take out the 8, it has no choice but to go our way. And that moved quite a ways. So now what we have to do though, we want to pull, like, so on this 1 hour play, see us pull back in the zone. So that pretty much came in where we need to be taking profit. That just happens, right? So if we move this up, because we got a deeper pullback to an 8.6. So this is where we should be right there on the adjustment. And we almost got that. So that's man, that left us with a long wick. So we'll see if it wants to revisit that low. But based on that 8.6 retracement at 1.18 extension, right? We always say if it pulls deeper, you just adjust your TP. But that got close. That's a tough one there. Because if I'm trading this on the 1 and I get that close on a move like that, I take profit. You know, it's a good idea, or at least close out some profit on that. If you're playing just this 1 hour setup strictly, strictly playing this 1 hour setup. But if this 4 hours going to play out, is eventually going to continue to move down. So there we go. That's where we're at. We got a 4 hour stochastic that's moving back up into the sell zone. So we'll continue to watch that GJ and see if we get a further move to the downside, in the next couple of days. Any questions on the GJ? Oh, I know, Reese. That burst, but that's you've got, because of your time zones and the markets opening and closing, you've got those pending orders sitting there. That's why some people try to trade that
Give us a minute, everybody. Looks like Benny's having some technical issues. We'll get it figured out in 1 minute. Everybody, Benny said he'll be back on in 1 minute. His computer shut down. So we'll be back at it. Give us a couple minutes here. So while we're waiting for Benny, if anybody's, because I'm driving, so I can't see the chat, but if anybody's able to unmute, that's taken some of these challenges, I want to hear about you guys' experience, what you've seen, what you're feeling, what your thoughts are as you're going through it, and where you might need some help. Anybody able to unmute? No? Okay, cool deal. Well, if anybody's able to send us an email, because I'm not sure if you guys put things in the chat or not, driving so I can't see it, but send us an email, all right, about your experience with the prop firms and things that are going well for you and areas where you might need some assistance or guidance. Cool.
Ryan?
Yes.
No, I was just wondering if we could kind of, since no one's speaking about the thing, when in yesterday's session when we talked on Mindset Monday, when we were talking about, taking back our power, with there being so many benefits to taking ownership of your feelings and your values and your everything, why do you think people are just hesitant to do that when it's so empowering?
Because I think it's a couple things. One, we're afraid to address those issues from our past because they hurt. And those issues from our past a lot of times come from people that we love. And it then leads to some sort of insecurity of self. And those issues are difficult for us to address because we've been cultivated to believe that thing for so long, right? And so to be able to step outside of that paradigm, to shift it, to say, that's not who I am. That's difficult for us a lot of times to wrap our minds around. And it's scary because it's difficult than everything that we've been taught, right?
Yes.
And we've cultivated those habits, those neuronic connections in the brain, and changing that is pushing yourself to an uncomfortable place. And we as people, we don't like to be uncomfortable.
Right.
Because it's different. It feels different. And we've labeled it as fear, or we've labeled it as hurt because of those things that we've experienced.
Gotcha.
And so the challenge that I give myself and I give us is to press into those difficult moments and press into that uncertainty and press into the fear so that we can move through it. Because a lot of times and this is kind of how the way it's processed in the brain is, I won't make it, right? I won't make it. So it all comes back to the same feeling, but in the brain is fight or flight, and it feels like death. But what you see through different examples is as you move through that experience, you don't die.
Mhm, mhm,
And if you don't die, then you're able to live.
mhm.
And that living is taking back that power, taking back that ownership. But it's easy for us just to blame external things, because the hard thing is to accept that I can own this, because then that ownership means that you have to take action. Whereas if you blame somebody else, you don't have to do anything because I don't have control of it. That's what we tell ourselves, even though we do have the control. So that's the hard part for us as people, because of how we've been cultivated over extended periods of time.
Gotcha. Thank you so much, Ryan. I appreciate that.
You're welcome. It's a good question.
All right, everybody. Sorry about that. Chrome crashed again. My apologies. So all right. Let me move on to, so that's the GJ. Any questions on the pound yen? Nope. All right. Okay. Let's take a look at the pound dollar. Right? Similar scenario, right? We got the trend line break on the 4 hour. Okay. 4 hours to cast is back in the sell zone. We got some move to the, a move to the upside right now going on with that 4 hour candle. This was our 1 hour setup. Okay. Where we've got that 80-20 plan out. Right. So 125 to TP1. We almost got there. We got around that 4 hour resistance level. We got this 1 hour to cast it back in the buy zone. So we're getting this move up. So let's see if we can move back up and tap that TP1, right? Some folks might take a profit already as we got close to that 4 hour at 122.24. But if you didn't, then you're holding on to that trade. Let's see if that 4 hour candle can push us right back up to that TP1. Any questions on the pound dollar?
Good morning.
Good morning.
The bias on this one, I don't know, for some reason my analysis had it where my bias was bearish. What am I missing that you guys are saying bullish?
Because we are bearish, right? So it just goes back to what we teach fundamentally in the training, right? So if the market moves in waves, right? So I agree with you. This is a down AB fib. If we have a down AB fib, what overall what's the bias long term on that?
It's bearish.
Okay, thank you. So, but if we move bearish, we move in waves, right? A, B, C. Does B to C move? Is it moving bearish or is it moving bullish from B to C?
It's bullish.
Okay. From C to D, is it moving bearish or is it moving bullish?
That's bearish.
Okay.
So you're just playing the retrace for the bullish.
Plan a correction.
Okay, gotcha.
Yep. Plan a retracement, right? So if this is going to move, right? We got an A, B, right? See, now the market moves, but ultimately, this is the way. This is our 80-20 play, right? Our classic play, where we get a shallow pullback, less than the 382, and it pushes down and it breaks that B boundary. There's a high probability that it'll stall out around this 118, 127 zone and move higher. So we're playing the correction, right? So we ultimately look for a high price. So if you're saying that your bias is bearish, which is 100% okay, and you don't trade this retracement, then you're waiting for a high price. Because if you sell something, you want to sell it at the highest price, right?
Correct.
Okay. So there's only certain zones that we look to trade, primarily in this group, right? If we're trading with the trend, we like to trade right up here. If you use Smart Trader, this big red rectangle here, the 61.8, 786 zone, because we want a higher price. So we want to see this move, right? We call this our C. We would prefer, if we're going to get short, if our bias at that point in time that it reaches that level is still short, pound dollar, that's where we want to get short, because it gives us the greatest risk to reward. And it enables us, if we want to put our stop outside of the A, which is an area that is not obvious, right? So here's your A boundary. So if I get this pullback, to a 61.8, okay, in this example. So let me take this off. Okay. So if I get a pullback to a 61.8, which is right here. So let me pull this. Let's do this with the trend. Okay. We'll just pull this move off. It's already retracing. If I want to play this short, because I have my rules. Your rules, you might trade that. Okay. You might trade that short. I don't. Okay. Now, if this trade pushes up and you're saying my bias is bearish, that is A-okay. You needed to move in this direction anyway, so you can get a high price. We've just decided to trade it, but you don't have to. Okay. So you want to see this price move up into this zone. We'll start at a 61.8. Okay. So once it gets to this level, $61.8. There. I want to start to look to get short. Whether you have sell limits in, I like to trade at a 61.8. 50% of their structure, like if there's a big fat daily or weekly or monthly level of resistance sitting in there, I'll entertain that with some additional confirmation. But hey, these are beautiful spots to trade. Why? If I trade it off to 61.8, I can put my stop above the A. Can you put it above what we call our C, which is our highest, right, price within the AB boundary? Yes, you could do that, right? Run a tighter stop. Okay. Totally up to you. But if I can put my stop outside this A, widen my stop, put it in an area that's not so obvious, then I can still have, because if I get a 61.8 pullback, then my projected D extension is going to be where? It's going to be at the 1.618. So we'll change this to a take profit target. Bang. Okay. So in fact, let me clear this 786 out. We're just going to play it off the 618. Now, if I enter at my 61.8, you guys follow me? Everybody follow me? Yes, no?
Yes.
Okay. If I enter at a 618, I put my stop above the A. Here's my risk. Bang. If my projected TP based off of that pullback to a 618 is a 1.618, there's my opportunity to gain. So if I take my stop at 123.35, $123.35 minus my entry, 122.69, I get a stop about 66 pips. I take my entry at 122.69, right? That's how you calculate this, by the way. And I look at my TP at 120.70. That gives me a TP of about 199 pips. That's pretty much a 3-to-1, 3.01, right? So people would tell you out here, you need at least a 3-to-1, 9-to-1, 10-to-1, 8-to-1, whatever they talk about this garbage online, right? But they don't tell you how to find it consistently, okay? So that's your setup if you're looking to get short. Bang. So if you're bearish and you're with the trend, you leave this setup alone, this counter trend move. You sit back and you go on and you search through your charts for your high prices to get short. You move on to another pair. And when price gets to this level, you make the short, right? Maybe you use additional confirmation. So maybe you need to say, hey, I need a trend line break. When it gets to that level. Maybe you say, I needed to get to this level. I would prefer to have some structure, and I need my stochastic to be in the sell zone. Above 80%. And if all those things come in line, I'll short it. Questions, anybody? I want to get this cleared up.
I think that my, I won't say mistake, but I've been in this trade since Friday morning.
Okay.
So I think the pullback is what had me concerned because, you know, my bias, as I mentioned, was bullish, where you just marked up as saying that you wait for the 80-20. If you want to take that pullback bullish movement and take a trade on that, you can. But then once it does finally finish that pullback, you initiate your bearish trade.
Correct. Right. So
Okay.
you've been short on this, you said, since you've been short on this? Or what's been your move? Or you've been long? Friday. You've been short since Friday?
You said what? Yes.
Okay. Yeah. So here's the thing. So what time frame are you planning from that you made your initial move?
You mean when did I find my entry point, or?
Correct. That's cool.
Okay, I entered on the I put my on the 4, but I look at the 1 or usually the 1 to find my entry point.
Okay, gotcha. So if you are overall your bearish is bias is your bias is bearish, right? You can use these opportunities. So you're saying, okay, look, now it depends on how you're developing as a trader, right? Am I a swing trader? Do I like shorter term trades? Do I like to be in and out? Because if you like to be in and out, then you could take profit, right? And then when it pulls back, you get back in. If you're swing trading and you say my overall long-term bias is bearish on this pound dollar, and you're in a good swing, right? Then you have to know as a swing trader, and if you're trading with the trend, you say, hey, I like to swing trade. I like to trade with the trend. Then if you're in this and you're up good, say you had an entry and you're up good right now, you're up, depending on where you enter, say you got in for a hypothetical example, say you got in right at the 61.8. Well, if you got in at this 61.8, right, at this lowest point, you was up 155 pips. You have to know as a long-term swing trader that price is going to pull back, right? So you have to develop a strategy to say, you know what, I like holding trades longer. If this price pulls back, then I'm going to add to my position because I want this, I'm expecting this to go short. You see what I'm saying? If you're trading with the trend and you're already in a position, right? Especially if you're in it from a higher time frame and this trade is moving short. You have to expect, yes, it's going to pull back. And when it pulls back, I'm going to add to my position. Why? Because it's giving me a new high price to sell. So if you short it initially at, you know, 0.5%, and it's moved down in your favor, and you're up 155 pips or so, and it pulls back 75 to your zone, to another zone for you to sell, then as a long-term swing trader, I'm most likely going to add to my short if I'm trading with the trend. Because I expect this, my idea, which I have to have the utmost confidence in, my idea is that this is going to be bearish for another 300 pips, 400 pips. You follow me on that?
Yes.
Right? So if you're only trading with the trend, that's how you want to think about these pullbacks if you're in a longer term swing trade. If you're in a longer term swing trade, right? If you're a shorter term trader, and you might look at the daily, you might look at a daily chart, or you might, like, for example, you might look at this 4-hour chart, and this pullback, it didn't quite get to that 786, so we're still expecting a 1.618 D extension, okay, here. So you may say to yourself, well, from this 61.8 to this D extension is 467 pips. So I've got 467 pips of selling potential on this, if this plays out the way I want it to play out. So you might go to a lower time frame, or to the 1 hour, to the 15, and you say, I am going to trade ABCD waves on the smaller time frames for up to 467 pips. But you might not, if you're an intraday trader, if you like smaller setups, you might not trade it and hold it for that one position for 467 pips. You might go down to the 15-minute, or the 1 hour, or the 5-minute, and you might say, well, here is my target at 467 pips, way down here, boom. So this is 467. 467 pips. That's the target. Okay. 4-hour target. Okay, 467 pips of bearish potential. You might come to your 15-minute chart, or your 1-hour chart, or whatever you like, and you may say, well, on my 15-minute chart, I got a smaller, right? Because the market is fractal. I've got a smaller ABCD wave here. Like so, okay? And I don't want to get in it and hold it all the way for 467 pips. I don't have a tolerance for it. I don't have a patience for it. But my direction off that 4 hours telling me that I've got a downside potential of 467 pips. So I might only play this 15 like this. I'm going to play a smaller version of what I'm doing on a 4 or on a 1 hour. Boom. I'm going to play the mini version of that on my 15 like this. Bang. And I'm out. So my mini version, it's like this here, right? Bang. That's what I'm playing, right? I got 467 pips of selling potential. This trade right here is going to give me 75 of that. I'm out. That's my trade. I'm good. For some people, that's their trade for the week. And then the next time that it pulls back, right? I'm out. I took profit. The next time it gives me a setup, maybe it pulls back to a 786 this time. Well, take profit is there. Bang. So now, out of that 467 pips, I took 75 on the first one. Now I just took 90. It's all the same stuff, different time frames, right? That's why Reese trades the 30-minute, and he's having success. He's found a sweet spot. He's doing his top-down analysis. He's getting his direction right. Boom, I got an 80-20. He's trading it, right? The 30-minute is his chart. So he may be doing this on the 30-minute, knowing that, hey, I've got 467 pips of downside potential on the pound dollar. But the idea, right? And it's a great question that you ask, because the idea is just understanding that the market, you know, is moving in waves. Doesn't go just straight up and straight down. It moves in waves. ABCD waves. And you could take advantage of it, right? On the counter move, the B to C, or that C to D. You're welcome. Right? That's it. So these are the zones that we trade. Okay. So our 80-20 setup, right? Our knockout, our bread and butter setup on that counter trend move is when we notice, okay, and we develop that skill set for saying, oh, this is a new AV boundary. Price only pushed to a 236, anything less than a 382, anything less than a 382 on a B to C move. And after it pulls back, it doesn't quite make that 382 and it breaks my B boundary. Here's my A. Here's my B. If price pulls back to anything less than a 382 and it pushes down and breaks this B boundary, price has a high probability, follow me now, a high probability of stalling at this 118, 127 zone. And it can stall there for 3 days if it wants to, or 30 seconds, right? It's not the point. The point is recognizing the zone. Anytime it does this, it has a high probability of returning for a deeper retracement. Having buyers push the price up. Okay, so what we then do is we know that price loves to fulfill at least a 382 on the fib, the way we set it up and the way we trade it. It loves to fulfill at least 38%, take back at least 38%. If this A to B is a 0 to 100% move, is now it likes to take back at least 38% of that move, okay, before that trend continues and heads down. At least. The key is least, because what does that mean? That means that it could push higher in the zone, right? Because buyers are pushing the price up. They're willing to buy that TV at a certain price, right? Up until a certain point. To a certain point, and then it sells off, right? If that price is going to go higher, it takes out the A. And the trend for that particular time frame, that particular fib, is over for the time being. It pushes higher. And we've talked about that with different time frames and what can happen and everything. But that's the idea. Okay? This is the 80-20. That's the zone. Now, can it push lower than that? Yes. Some of us like to use wider stop losses. We say, hey, we put our stop loss at that 1.618 extension. We trade smaller because it'll give this trade room to float because I don't control the market. So I'll use a wider stop loss and it can push down further. It can dance around, consolidate. But if it doesn't take out my stop, the market only moves 3 ways. Boom. Okay. That's the 80-20. Now, some folks say, I want a tighter stop. And I'll use additional confirmation. So I just want to be able to train my eyes and develop my skill set to mark up my charts and wait for price to hit my zones. Once it gets to the zones, it's up to me and my trade plan on how I want to trade that setup. Should it give me evidence that it wants to move in my direction? So some people will say, I'll play that 80-20 zone, but what I wanted to do is I wanted to break a trend line, or I wanted to break the cloud, and I like a tighter stop loss. So I am going to put my stop below the last low prior to the trend line break in this example. So now my risk has tightened, right? So instead of my stop being at the D and being wide, which means that if I follow the rules and I divide my risk by my stop loss, the wider the stop loss, the lower the lot size. The tighter the stop loss, the higher the lot size. Presents the same 0.5%, 1%, 2%, whatever you're trading. Everybody follow me on that? Drop me a 1 in the chat, please. We have to make this as simple as possible. So if I'm risking 1% and my stop loss is 33 pips, my lot size is going to be lower. If I'm risking 1% and I trade off this trend line break, boom, then my stop is now tighter. That's 20 pips. So instead of me trading at $2 a pip, now maybe I can trade at $1.20 a pip. I mean, instead of me trading at $1.20 a pip, now I can trade at $2 a pip because my stop loss is tighter, but it represents the same 1%. And what I'm going to do is, because this is my trade idea, this is what I believe in, I'm following my trade plan, whatever your trade plan is, I'm going to hold this trade until I get to my target. Because if you cut your winning trade short, now we always say we have those caveats, right? If I've got a daily resistance level that's 10 pips before I get to that 382, I have to entertain, right, taking profit there. I have an ideal target, but hey, I could get a reaction there. I'm either going to take some money off the table, move my stop up, take or close my trade, right? We know that. We have those caveats, right? So you have to let your trades play out, because it's those trades, if I'm putting myself in, now typically depending on how you play your stop, maybe if I'm playing straight 2-to-1s, guys, I have to let those trades go, as closest to that take profit as possible, because it's that extra, right, that's gonna compensate for my losing trades. Therefore, if I'm in a 2-to-1, I only have to win 50% of my trades to make money. But it doesn't happen if you continuously take profit anytime you're $2, $3, and you see blue in your phone. if you consistently do that, it's going to be a horrible journey. You have to if you've calculated your risk before you take the trade, you have to be comfortable with staying in the trade, because you start with what you can lose, not what you can gain. All right. So that's a great question. It's always good to go back and review those things. Any questions before we log off for the session? No questions?
No.
All right. Awesome session, everybody. Awesome
Thank you for
session.
that Thank you for that explanation.
You're welcome. And thank you for the question, because it was a great one. Everybody, have a great day.
Thank you, Benny.
You're welcome. Congrats to everybody that's taking the challenge.